Hello and welcome to the Closing Beat, everybody. Happy Tuesday. Hey, you know what's going to happen? Now Eric's going to pop out and go, hey. I interrupted his video. He was in the middle of doing a video, and he was just about halfway through, and I went, hey, how you doing? He's come a long way. That would have interrupted him in the past. Hey, welcome to the Closing Beat. We're financial advisors here at Jazz Wealth. Hope you check us out there. Guess the Dow winner launched on our social media, right? I saw it this morning. Joseph S. was the winner, and congratulations. I think there was also a leaderboard. Oh, just in, breaking news, right? He hasn't emailed back, so you better email, man. You're the winner. You've been emailed to get your... I thought you said he wanted the gift card. Oh, he indicated that. Okay. And what happens if he doesn't email back? We've never had somebody do that. I guess Cody takes the card. Yeah, so you better email back or Cody's going to take your gift card there. All right, let's talk about the stock markets here today. Kind of a flat-ish day, and that is to be expected. That is to be probably to continue through the rest of the week, actually, because today we had no economic news. The big news this morning was Australia surprisingly raised their interest rates by 1/4 point. Australia. How often do I come to you and go, guess what, guys? Australia did something overnight that has happened plenty of times in the past, but we're talking about it. So that's the kind of day it was. I'm also going to talk about Memorial Day beer sales here today to show you the impact of your drinking habits over the holidays. We'll see if Bud Light was able to pick up any steam there. Yeah, we're going to go there today. Now, as far as the S&P goes, we've got about half of the stocks in the S&P now above their 50-day moving average. Usually the blue line on my chart's not there at the moment, but you got about half the stocks up there. We have about 100 names in the S&P that have hit new 52-week highs since the start of May. I just wanted to go back 1 month, but it's the beginning of the month, so I said, well, let's go back to the beginning of May there. There's a bit of a theme now in stocks that are about to hit 52-week highs, or stocks that are within 5% of hitting a new 52-week high. If you were to look at a list, you'd find wow, there's a lot of industrial stocks on that list. Kind of interesting there. So, for example, Expeditors is within 5% of hitting a new 52-week high. Fastenal would be on that list as well, although today was a bit of a rough day for them. They're on the list. Otis Elevators, quick recovery there and almost back to highs. And Grainger Worldwide. These are not exciting names that you will see in the media often, but they are very, very close. Hey, oh, and I might also point out there's a little bit of a shift here. There we go. Cruise lines. Norwegian Cruise Lines. Look at the tear for Norwegian Cruise Lines here. Just in the last 4 days, 15% in 4 days. So rather quick move there. And it's not just them. People like their Carnival Cruise as well. Come on. There we go. Carnival Cruise on the same tear with some room above to move there. Would you buy these stocks now? Let me know in the comments section there. With that kind of move, in such a short amount of time, would you buy those stocks? I venture to guess that if we were to poll you guys, which, hey, we can almost do that, right? We could do a poll. Yeah. Well, not today, but another time. So I bet you if we polled you guys, you'd say, no, I'm interested, but I'm not interested here. I'm not buying after a 15% move. I want a discount. Then I ask you, why wouldn't you do the same with the NASDAQ there? Before I get off track, banks they did their part. So banks did their part today. They've been trying to lift up the other side of the market here. Capital One, nice little run there, very similar to the cruise lines. American Express, just to point out a couple names. Discover Financial, DFS is the ticker symbol. And even working your way down the list to something like Synchrony Financial there, among others. They're all doing their part. And remember, they're 12% of the S&P. So we shared this with you yesterday. Financials, which have had a rough run lately, recovering nicely, they're 12%. So if financials decide that they're going to keep doing this, that's okay. That could help. It's not going to produce a rip-roaring type rally there, but they can get things going, or at least keep things going, if those large-cap tech stocks decide to take a break or pull back. Now, I want to point out something here. If we go over to the NASDAQ, one of the weaklings today, but it's understandable. It's had a great run today, very small, flat day, almost perfectly flat day. But take a look at this. The Russell 2000 by far the strongest index of the day there. Small cap there. I'm going to tell you why that's happening tonight on Jazz After Dark. We're going to go through the difference between NASDAQ and the Russell and why there's a shift going on there that could likely continue, especially as we get into the end of the month. In the small caps, it was kind of an exciting place to look today. Number one, I like small caps in general. It's kind of like my forte. And so I like looking through our small cap fund. We're financial advisors that actually manage our own funds here. So we have a small cap growth fund. And not all perfect, I'll give you that. We don't just pretend to have nothing but winners there. I never do that to you. But our recent dogs, right? We'll call them the dogs of our portfolio, which would be, you could probably guess, banks, right? Customers, Bancorp or QB, I always call it QB there, back to the 200-day moving average, recovered nicely. Okay, that's interesting. Brookline Bancorp, this is one of our worst bank stocks. So obviously recovering there. Glad to see that. What happened? Why are all these bank stocks higher there today? Huh? The small cap banks, I thought there was trouble there. Triumph Financial is our other one that's been a bit of a dog. Not so bad compared to the others, but all of a sudden, out of nowhere, did we see anything on the headlines about bank stocks doing well? No, they're all good, safe, clear? No, it's exactly what we're going to talk about tonight, the money rotating into the small cap stocks. And in particular, why in the world is that happening? Look at that. We got the Russell 2000. IWM is the ETF, just if you want to use one to look at it. Why is so much money and volume moving into small cap stocks? I will go over the exact breakdown of that tonight. Also point out a couple of other things. Our Signet, we happen to own this one. This is a jeweler, if you're not familiar with that. Twinkie, I did this in a class. We've owned Twinkie for a while. Got a little stale on us. Seems to be waking up there, so that's good news. Abercrombie & Fitch, yes, that's a small cap stock. After earnings there, it's been on a tear. I'm very happy with that. And sticking with retailers, Boot Barn, one of the better performers here today, 6.5%. We got a Boot Barn right down the road. I bet you didn't know they were public. Boot Barn, people buying their boots. All right. Goldman Sachs reduced their recession risk from 35% to 25%, and they're basically forecasting now June will be a pause for the Fed, and then July they'll likely raise by a quarter point. Why is that a conversation today? Because there's no other news. There's nothing else to focus on. Do you ever hear me come out and say, well, JP Morgan's analyst said this or that? No, I don't talk about that. Because it's usually washed all the way down and all the stuff we have to pay attention to for the day. Earnings and stocks falling and Coinbase, oh my gosh, right? No, that Goldman Sachs right up there. They were very smart to get that headline out there today because they knew nothing else was going on. Fascinating there. Hey, one other thing while I keep zooming through this here, financials. We got a bit of a little bit of a theme happening here, right? So financials look to be in rally mode. Industrials look to be in rally mode there. And materials look to be in rally mode as well. What does that mean? Why do we even care about that? Those are three sectors that people invest in and gain a lot of dollars when they believe the economy is strong and strengthening. So we have, notice that didn't happen to every sector today, just right over there. That money is moving in there. People no longer think there's any problems out there. Everything's good, right? Now, careful, because here's what's happening. You do not have a recipe for the S&P to just blast off. There's nothing that's going to make that happen at the moment. I mean, that could change, but it'd be a slow change. It won't happen overnight. You have now high valuations. You have less dough participating in the markets. Remember, $707 billion has decided money market funds are better. They're paying 5%. I'm good with that. I don't want to be in the stock market. I don't want to be in international stocks. Bonds are okay, but I'd rather just be in money market funds. So you've got that going on there. You have higher inflation, or at least still high inflation. All of that will cap the ability for the stock market to not have some rip-roaring rally, right? No, it's a rip-your-face-off rally. That's what it is. I'm going to go with that. Anyways, okay. So let's do this. Let's talk about a couple stocks here in the news, and then we'll move on. Coinbase, this is kind of obvious to me, but Coinbase is getting sued by the SEC for breaking the Securities Act of 1934. If you are a financial advisor, or if you ask your financial advisor, they should know the Securities Act of 1934 because it is required knowledge to become a financial advisor, even though it has nothing to do with effectively growing a client's account or managing their money or whatever. But here's what's going on real quick. As a business, they were acting as a broker, an exchange, and a clearinghouse. Big no-no, which we all knew they were doing that anyways. And Coinbase, by the way, has gone to the SEC numerous times and said, work with us here. This is new. We're not breaking a law that doesn't exist. Yes, we're doing this, but we're doing it with something that is not a traditional security. Well, Securities and Exchange apparently disagrees. They were also having what they call prime brokerage accounts. You guys probably don't get that often, but if you're large enough, you have what's known as a prime brokerage account where you get priority and you actually get sort of inter-exchange transactions. So they were doing that as well. Coinbase Wallet and their staking program. So these are the violations that are up for Coinbase there, and God bless them. They have a valid argument in a way, where if you read through it, they're not technically breaking the law, but because crypto was determined to be a security and not a currency, they are breaking the law. But they're only breaking the law because of what the SEC decided. So Godspeed, Coinbase. Do your thing. Old Dominion. Revenue per day down 15% in just May. I've been hearing from truckers out there that say it's really competitive out there for getting loads that actually have can generate a profit. Margins are getting really thin. This just confirms what I've been hearing from clients. And Smucker's most volatile day in years actually here. They are selling the devil out of that jam. The stock was all over the place throughout the day. You don't see that stock move like that often. You can just compare it. Just look back and see. It's just incredible. Incredible day for them. Okay. Did you do a little drinking through the Memorial Day holiday? Did you? Well, we know you did, because we can actually measure that. Let's take a look at a few things here. And instead of just telling you something, I'm going to point out the individual stocks that represent these companies in case you want to invest or you don't want to invest, right? So what we have is the last 3 years of each individual company here, and then we'll get into brands in a second. And we've color-coded them. So for Memorial Day, green is up significantly, light green is up somewhat, unchanged, down somewhat, and down significantly. Well, if we look, hard seltzer, that's still a thing. It blows my mind. That's a thing, but not very well. Over Memorial Day, you chose to drink a whole lot less of that. You also chose to drink a whole lot of anything related to Bud Light or InBev, the company, down 64% this year, so not good there. It looks like the beneficiaries were Molson Coors, who benefited greatly from your drinking habits over the holidays there. And although it's not really an increase, Constellation Brands, 52% there. If we take it a step further and we go by brand, let's take a look at the brands there. What were the volume of alcohol that you drank? And this, of course, we talked about the ticker symbols there. Now we go into actual conversation about the brands. Bud Light still not doing well for Memorial Day, 83% decline in volumes there. What I found fascinating was Modelo, up 68%. Remember, Constellation Brands said, I went through their earnings with you, they said we are going to put an effort on getting people to drink that beer. And it worked, right? Clearly, y'all are drinking the devil out of that stuff over the holidays. And if we go a step further, we look at inventory, right? This is the amount of product that's on the shelves at the distributors. If we look at inventories overall, inventory levels are up dramatically for anything Busch related. InBev, that would be the Bud Light sitting on the shelves there. And then inventories for Boston Beer, Heineken, Constellation Brands, and Molson Coors, of course, at more historically normal levels there. So I thought that was kind of cool, just something separate to talk about instead of going through the things there. And again, if you were to look, you have really just a handful of companies that manage all these beers. Constellation Brands is one of the beneficiaries, of course, because of what they're doing, but from the Bud Light thing as well. Constellation Brands is one of the beneficiaries of that. It is not projected that they will be the long-term beneficiary overall. You have a major shift, of course, from some drinkers out there that have chosen different beers now, but over time that's projected to spread out. So maybe they don't go back to Bud Light, I don't know, but they'll spread out and ultimately start trying different beers. So maybe just a temporary boost for them. All right, that's all I got for you there. Tonight, we're going to talk about the geekery wrapped around why this shift in small caps. Is it that small cap stocks are now interesting, or is there something more going on there? Hint, is something more going on there. I'll review it for you tonight, and I'll use a really simple example in real life so you can see exactly how this is going to go down. All right, I'll wrap it up there. You guys enjoy the rest of your evening. Thanks for hanging out with us. We'll see you later, right? On Jazz After Dark. Grab a drink, come hang out with me, and we'll see you tomorrow.